Hi there, welcome to Grain TV. It's Thursday, December 15th, a mixed day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn closing down around the 356 mark, losing 5 3/4. Beans, a very volatile day, closing up 6.5 after being down around 10.20 on the day, and wheat in Chicago was off 9. There were several factors that were driving today's action. Let's start first with some of the outside forces. First, the US dollar was substantially higher, at one point up as much as 1.7% before backing off, gaining 1.3% going into the afternoon close. Really yesterday's Fed announcement, of course, the interest rate hike was a known quantity, but what the market reacted to globally was the expectation that the Fed will now be more aggressive at raising rates in 2017. And so that got the US dollar against major currencies really moving higher, hitting a 13-year high. That obviously is problematic for export-sensitive commodities, and grain in particular, and corn and wheat were the sort of biggest losers in that regard. In soybeans, we continue to look ahead to this weekend where rains are expected to start in the dry parts of Argentina and last for the better part of 10 days. So really the market is sort of marking time, trading the demand news as it comes out, and we did have some good demand news, but recognizing that if the realization of the weather forecasts are true, then we're going to have nearly ideal conditions in South America this year to pencil into our supply and demand balance sheet. Other news out today, USDA announced an export sale of 132,000 metric tons to China. That's on top of what the USDA's weekly sales numbers were, which we'll get to in a moment. Other news out, NOPA crush came out. That was lighter than expected for the month of November, coming in at 160.7 million bushels versus 162.3. And then finally, Informa, the private analyst firm, pegged the U.S. soybean acres in 2017 to be even higher than what they had last month. They peg them at 88.8 million acres to be planted by U.S. farmers this coming spring. That is up 5.1 million acres from what we actually had as of the latest USDA forecast for 2016. So a 5.1 million acre increase in soybeans. On the other side, corn is expected to drop 4.3 million acres according to Informa. So really, the market, I'm not sure it's really trading that number. We're still sort of looking at South America. We're still sort of, looking for the potential for a weather that leads to a trim in Argentinian production. So really the next week will be critical. Coming back on Sunday night from the trade, we'll have a good sense of how these rain forecast models have turned out. Let's take a look at weekly export sales today from USDA. These numbers too were very supportive. 2 weeks in a row we've had all three commodities hit above expectations. Corn coming in at 1.5 million metric tons versus 800 to 1.1 million expected. Beans also coming in just a hair above 2 million metric tons versus 1.1 to 1.5 expected, and wheat coming in at 531,000 versus 300 to 500 expected. So again, demand, at least in beans, continues to be very strong, and these numbers for corn and wheat were just kind of discounted because we know going forward the US dollar is going to weigh on our competitiveness. If South America's crop turns out to be favorable, that's going to weigh on our competitiveness. And of course, we know in wheat we've got Argentinian and Australian wheat to compete against as they start to harvest their crop down there. Let's take a look at the trade action in beans. And January beans really has sort of been marking time for the last few days as it looks for more confirmation of this weather event in Argentina. But we did trade down to that 1020 mark before bouncing higher and closing around 1030. So watch for that 1020 mark as sort of a key underlying support. If we come back, I'm not sure we'll break it over on Friday's trade session, but when we come back Sunday, I expect a pretty volatile trade in response to whatever the weather models or the weather realizations are when we get back on Sunday. So watch that number 1020. If you're watching new crop November beans, 1008 is sort of the corresponding number we're watching over there on new crop. I'm concerned that if we break that, because we have good rains in Argentina, then it may be a downhill slide here in the bean market. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com. Take a look at our demo trading platform, get our technical alerts email. All of our services all combined are very valuable and only cost you for trades at $7 a trade. As always, we hope you look at us and consider us in your grain marketing needs. Have a great day. We'll talk to you on Friday.